All right, so good morning to you all. Trust you are all doing good. So this morning we are about to start our lesson. I guess you can hear me right. So we are about to start our lesson, and as we used to do, please kindly share the link. Share the link with your team members so that we can start as soon as possible. So share the link. This morning lesson is going to be so amazing, and I need you to share the link with your team members for them to be here before we start. So do that exercise and share the link with your team members, right? Share the link with them so that they can join us for us to start as soon as possible. We're not going to waste my time, so share the link. Share the link as up. So I want to see the numbers being in around at least 100. And you know, in Twitter ambassadors, we are more than 500. Okay. So when it comes to meeting that will impact us for our business to grow, we are supposed to be more than 200 here. Hmm? So if we have 65 people here, it simply means we are not even up to 1% in numbers. So share the link with your team members and let them join us. Share the link with them and let them join us so that we can start right away. Okay? Share the link with them so that they can join us for us to start right away. And like I said, this morning session is going to be so interesting. So you don't need to miss it. Neither should your downlines also miss this morning session. You don't need to miss this session. Neither should your downlines also miss this session. Hmm? Yes. And I've always been saying this that if you really want to grow, when it comes to trading, when it comes to Royalq, if you really want to grow as a leader, you should always ensure that whenever you are present in a particular meeting, you share the link with your downlines so that they can also join. It will ease your effort. That is what we mean by leverage. So they are there, they are learning with you. So you wouldn't go back to teach again because they learned everything with you here. And that will make your work to be so easy. So always have the confidence in alerting your downlines in joining all the necessary meetings you are supposed to join. Right? Good. Good. All right. So for us to start, I think we are about 87 in numbers now. We are about 87 in numbers now. So please keep sharing the link. Share the link with your team member directly. Send it to their DM. Let them join so that we can start. Yes, they don't need to miss this lesson, right? They don't need to miss this lesson. If really they want to make money, they want to progress, they want to mean, they have to join. You get it? They have to join. So let them join us up. Okay, so we are about 92 in numbers now, and as we used to do now this morning, I want to know where you are joining from. This morning, I want to know where you are joining from, especially your name and where you are also joining from across the globe. I want to know where you are joining from this morning. So let me know your name. Let me know your name and where you are also joining from. So let me know your name and where you are joining from. We're about 90 in numbers. So, Sophie from Uganda, Byron from Kenya, Grace from Kenya, Leila from UAE, Tony from Rwanda, and then Ability from Nigeria. So Abu Dhabi. All right, Seth from Tanzania, and then also Motovi from Kampala, Uganda. Right? Okay, Jasmine from UK, then Mana from Thailand, Dick from Ghana, and then also Big Sam from UK. Okay, so MS from Ghana, then also Hamjad from where? Uganda. Okay. So we also have Josephine from South Sudan. Fatsia from Uganda, and then also Nuruddin from Ghana. Oh, okay. So Kenya. Okay. All right. So we have Philistan from South Africa, Ronald from Qatar, and then also um Moria from where? From Dubai. Okay, Margaret from South Sudan, and then also please your name, Ethiopia, your name. Okay, we also have Danso from Kenya, and then also Michael from Ghana, Papa Charles from Ghana, and Papa, you are welcome. So Grace from Uganda, and then also Alfred from Ghana. Okay, so we also have iPhone, that is Desmond from Cameroon. Desmond from Cameroon. We are about 113 in numbers now. Let me know your name and where you're also getting from. We also have guestness from Ethiopia. Guestness from Ethiopia. Oh, who is bullish? Bullish from Nigeria. Nigeria, are you sure you are called bullish? So we also have Helen from Uganda. And also Charles from Switzerland. Okay. We also have Desi from Uganda and then also Iceland. All right. So, guys, you are all welcome to this morning session. You are all welcome to this morning session. We are about 114 in numbers. Now, Rebecca, you are welcome from Kenya. You are welcome. You are welcome. So, David from Uganda. All right. So, guys, we are about 115 in numbers now, and we are good to go. Okay. So, Steven from Ghana, right? Steven from Ghana. Debbie from Liberia. Debbie from Liberia. All right. Your name is Buran, eh? Anyway, that's just by the way. Okay, so guys, I'm also Brother Emmanuel. I'm Brother Emmanuel from Ghana, Accra to be precise. And this morning, I'm going to be your coach, leading you through this morning session. And having good experience in the markets, and then also having been trading with Royalq for many years now, I've had good encounter and then also good experience in the entire financial market for the past 8 years. And I can teach you a lot of things that will help you to impact your business in the crypto market, right? So this morning, I guess we are all willing to learn this morning. We are ready. You have your book, your pen, and paper here, and we are good to go, right? And we are good to go. So, Ruben from Tanzania. Ruben, you are the last person, and you are welcome to this morning session. So, guys, ladies and gentlemen, it is time for us to start our lesson, and I'm going to share my screen. And before I share my screen, let me see. Okay, I'm the only host here, and I will need two people. So, Ambassador Saul is here, so let me make you a co-host so that in case the network fuck up, you'll be able to assist me or alert me. Okay, so you are my co-host. So I will need another more person. So one more person in addition to be my co-host. So okay, so I think Ambassador, sorry, you can do that work for me, right? So once I get out of the meeting due to network, you should alert me so that I can go along with the team. All right. So Wankwaza from Tanzania. All right, so Wankwaza, you are welcome. If I'm not able to pronounce the well, the name will forgive me. All right, so guys, let me share my screen. Let me share my screen. And it's been so good and amazingly seeing the market experiencing more bullish momentum. I think it's something that we all cannot wait. We've been waiting for so long, and I'm much enthusiastic about the market now. And I believe you are also happy how the market is trending, right? And this morning, you see, talking about trade on the futures market and talk about that is the reason why we would be here to learn all the time because the futures market entails a lot, and your understanding, your knowledge about the futures market will ensure or it will help your business to grow very well. It will help you to make profit very well. It will help you to be able to feel more relaxed and trade on the futures market to generate profit. To generate what? Profit. Right? So this morning, this session is going to be a very long session, and I'm going to take about an hour and 30 or 2 hours to I'm going to spend at least an hour and 30 minutes or 2 hours here with you. And I believe after this session, you are going to learn more and then also it's going to be an impactful session. So please let's proceed. All right, so futures trading. Futures trading. So Mark from Malawi, you're also welcome. So futures trading. Now, over here we are trading futures perpetual. We are trading futures perpetual. And like I've been explaining all the time, in crypto markets, there are different forms of trading. In the crypto markets, there are different forms of trading. And over here, we are trading what we call the spot markets and then also the futures market. So this morning session is purely about the spot, sorry, about the futures. This morning session is purely about the futures. I'm going to introduce futures to you, and then also help you on how you can also configure or use Royalq to set up a futures account. Very nice to trade. So, like I said, it's going to be a very long session, but you're gonna pay attention and then to follow to learn more. Okay. So one of the things about the futures market is that you first need to understand the concept of the futures trading. And when we talk of futures trading, over here we are focusing on futures perpetual. Futures perpetual. Hmm? Now, when we talk of futures perpetual is a market or it's a contract, a market contract which does not expire. Hmm? Which does not what expire. So traders come in with an idea of signing up a contract to generate profit. So unlike the spot market where real trading happens, on the futures market it's a contract. So on the spot market, people have access to buy assets directly. They own the asset. But in the futures perpetual market, traders do not own the market or do not own the asset, but they sign up a contract, hmm, which does not expire. Hmm. So the contract on the futures market does not expire, which simply means it's perpetual. It's, should I use the word long lasting? Okay, it's long lasting contract. And because the futures market is a long lasting contract, people come in with their little amount of money, or people come in with money to make good gains or to make good profits based on a character called leverage. Based on a character called leverage. So whenever you come into the futures market, you may be familiar with these terms: futures perpetual, and then also leverage. What makes the futures perpetual a market different from the spot market is what we call leverage. So the leverage is the actual contract of the futures market. So those who trade on the futures market sign in a contract based on what we call leverage, right? So it is the help of the leverage that helps traders to be able to make profits, which differentiates the spot market from the futures market. So on the spot market, real trading is made. On the futures market, it's contracts. So always the price on the spot market differentiates from the price on the futures market. I guess I'm loud and clear on the line. Am I loud and clear? Am I loud and clear on the line? Am I loud and clear on the line? Am I loud and clear on the line?
Yes, you are.
Very good. All right. All right. So what we are saying is that the trade on the futures market varies from the trade on the spot market because of the contract based on what we call leverage. And what is a leverage? What is a leverage? So when we talk of a leverage, when we talk of a leverage, so as the name goes, leverage is a borrowed capital. That's the exchange gives you the opportunity to earn or use to trade. So the exchange borrows you an amount of money for you to use that amount of money to trade. And with that borrowed amount of money here, it's your preferred choice. It's going to be your preferred choice, not the exchange that is going to determine your leverage for you, or not Royalq that is going to determine your leverage for you, but you will determine your leverage yourself. Please stop writing, okay? Stop using my screen. Augustine, stop that. You are too mature to do that, okay? So don't do that. All right. So whenever you are using leverage in trading in futures market, you are going to see things like 10x, 5x, 2x, 3x. Now, what does these things mean? This simply means that whatever money you have in the futures market, if you have $2, if you have $2, if you have $2, you have $2, and you choose to go for a leverage of 10x, it simply means you are borrowing two times 10 of your capital. All right. So don't do that. Let's proceed. So it simply means you are borrowing an amount of money that is a multiple of 10 of your capital, and that is going to give you 20, right? So 2 times 10 is what? Is 20. So when you go for a leverage of 5 with a capital of $2, it simply means you are borrowing 5x of your capital. Sorry, yes, 5x of your capital, which is 5 times 2, which is going to give you what? Which is going to give you what? Going to give you 10. When you borrow 2x, it simply means you are borrowing 2x of your capital, which is going to give you 4. 3x of your capital, which is going to give you 6. So that is the meaning of what? Of leveraging. So at the end of the day, your actual money is $2, but the exchange based on your preferred leverage, they've given you $10, which simply means whatever profit you are going to make in the futures market is going to be based on the leverage you sign for yourself in the contract, which is $20 or $10 or $4 or $6. Are we learning? Are we learning? Are we learning? Are we learning? All right. Right. So you can proceed. Just to know you are on track and you are following. That's the reason why I have to get back and then also draw your attention. If you are learning, then I proceed. Right? Very good. Okay. So now we can proceed. Now we can proceed. So when it comes to the futures market, the trader is able to make profits, and the profit that the trader makes is constituted on three things. It's constituted on what? On three things. It's constituted on three things. One is your leverage. Your leverage. Two is what we call your margin. And then also three is what we call your price movement. Your price movement. So, like I said, this morning session is going to be more advanced, and I'm going to scrap off this particular foundation, then I build up with the rest, right? So, leverage, margin, and then also price movement. So, you've understood what you call leverage, you've understood what you call margin. When you talk of margin, the actual money you are using to trade is what you call your margin. The actual money, oh please, you can request again for me to allow it for you. The actual money you are using to trade is what we called what? Is what we called margin. So the margin amount or the margin money is the actual money the person who requested for. Okay, okay. So the margin money, very good. The margin money is the actual money you are using to trade, right? And then the leverage money or the leverage amount is based on your margin. So if I go for $10 and I go for if I have $10 and I go for 10x, it simply means I'm using a margin of $10 and a leverage of what? Of 10, which is going to give me 10 times 10, which is going to give me 100, right? Now, what we are saying, the next thing is what? Is the price movement. The next thing is the price movement. Now, when it comes to the price movement, how does price movement affect profit making in the futures market? How does price movement affect profit making in the futures market? Right? How does price movement affect profit making in the futures market? Now, when it comes to the futures market, unlike the spot market where actual profit is made based on how the asset moves or how the asset is able to rise, when it comes to the futures market, profit making depends on the price movement and then also your leverage as well as your margin. So when we talk of price movement, what is price movement? Now let's go into our so when we talk of price movement, this is it. Price movement is the minimum amount or the minimum threshold, the minimum amount an asset is expected to move in what? In value. The minimum amount an asset is expected to move in value, right? That is what we mean by what? By price movement. That is what we mean by price movement. That is what we mean by price, right? So let's go into our, sorry, let me see. Okay, let's go into our exchange and let's identify or let's check where we can see price movement. So let's use OKX, sorry, okay, let's use Binance. Okay, so now we are on Binance. Now let's choose to click on futures. So this is futures. Now on futures, come here. Where is it? So let me, okay. So on futures, you are going to see what you called. You are going to see this thing here, founding and then also countdown, founding and then countdown. So let's click on it. Let's click on it. So when you click on it, let's click on funding rate history. We'll get back to that. So click on info, right? And then come to trade history, trade, trade rules. Sorry, trading rules. So on trading rules, you see what you call price movement. Price movement. So this is price movement, minimum price movement, minimum price movement. So when it comes to trading, so for instance, this particular asset is called hamster. Okay, hamster. Now this is the minimum price movement. It simply means for the asset to increase in value or decrease in value, the minimum increment, the minimum amount that particular asset can increase or can add up for the price to increase or rise is 0.0000. How many zeros? Five zeros. So 010. So anytime the asset increases in this value, a profit is made. And anytime the price also decreases in this value, depending on your position, either you are on long or you are on short. So if I'm on long and the price increases, there is an additional price of 0.000010. Profit is going to be made based on my leverage. You get it? And in same manner, if I'm on short too, if the trader is on short position and the price also moves 0.000, or when the price drops 0.000, the trader makes profit, right? So when it comes to futures trading, price movements, what I've been saying is that price movement is everything you need to know. Price movement is everything you need to know. Now, the amazing thing here is that, you see, as we are entering into the alt season, as we are entering into the altcoin season, most of these cryptocurrencies, most of these cryptocurrencies that we see will be moving very fast and profit is going to be made a lot. We are going to make good profit in the futures market whilst we are entering into the alt season. And how do we get to know that we are entering into the alt season? I'll talk about that briefly. Now, so you have your price movement, right? You have what we call price movement. So price movement is something that you need to know and understand about the futures market, right? So you make profit based on your leverage, margin, and then also price movement. So this simply means that whenever you are setting up a trade, you should think about your leverage. You should think about your leverage very well. Okay, you should think about your leverage very well. So the trader can decide if you have a leverage of let's say 10x, a margin, a margin of $10, and then price movement. So you check the margin, you check the leverage. Then after that, the price movement will make sense depending on your position. So now when we talk of position, we either have long position or short position. So like I said in the futures market, there are two contracts, or it's a contract. a market based on contract. Now, what is the implication of the contract? Listen, one trader has decided that okay, the market is going to rise. One trader too has decided that the market is going to drop. So one trader is predicting that the price of the asset is going to rise, the trader go on long. And one trader is predicting that the price is going to fall, the trader goes on what? On short. That is the meaning of long and then short. That is the meaning of long and then short. So when we say long, it simply means the trader is predicting the price of the asset to rise. And when we say long, it simply means the trader is predicting the price of the asset to fall. So you are going to either see long and then short, long and then short. You are going to see long or short. So most often, when a signal is given, you will see long or you will see short. That is what it means. So if you go on short, it simply means in your expectation, this is what makes the futures market to be different from the spot market. So the spot market runs on a real market, real time market, and then also the futures market runs on what we call expectation. Expectation. So expectation, right? So at the end of the day, the trader on the futures market is running what is expecting a particular price to move in a particular direction. So it's either you are expecting something on this particular zone or on this particular zone. Do you understand? If you understand what I'm saying, give me one in the chat. If you understand what I'm saying, give me one in the chat. If you understand what I'm saying, give me one in the chat. If you understand, give me one in the chat. If you understand, give me one in the chat. If you understand, give me one in the chat. All right. That's good. Can proceed. Now, one interesting thing about the futures market that I have to talk about is that the futures market, like I keep saying, I keep comparing the futures market and the spot market in the lesson so that you can understand the difference, right? Because the futures market runs on contract, sometimes the price is different compared to the spot. Compared to the spot, the futures market price sometimes is different compared to the spot, and the spot is the real market. Listen, the spot is the real market. And then the futures market is just the price is based on contracts. Okay? The price is based on what? On contracts. I'm going to explain this to you. And this is what happens in the futures market. So because the futures market is on contracts, they always need to get what you call market balance. Market balance. So the market must balance, the market price must balance with the spot price. Listen, the market or the contract price must be balanced with the spot price. So because the price must be balanced, there is a need for the exchanges to bring price balances here. And that is what is called fund rate. Fund rate. So today I'm going to elaborate more on the fund rating. Now, when we talk of fund rating in the futures market, fund rating is a common thing in the futures market, and you cannot see fund rating on the spot market. Why? Because always there is a need for the market to have what we call market balance. Market balance. NB. Okay. There should be a market balance in the market or on an asset. So in this case, because those trading on the futures market are running a contract, they always want to push the price beyond the real time, the real market price because of the contract. Listen, someone is using 20x leverage with a capital of $10,000. This would push the price very far away from the original price, which is the spot price. When this happens, there is always an imbalance in the market. So now the exchange decide that, okay, if that is the case, we should create a system where there would always be a market balance. So now they said, okay, we are going to create what we call funding fee. Funding fee. So what is the funding fee going to do? So the funding fee is going to create what we call going to create market balance. The funding fee is going to create what we call market balance. And this is how it's going to create the market balance. Those who are winning the trade, so those who are, let's say, we have long and then also we have short, right? We have long, we have short. So if those who are on short position are the one winning the trade, they will be paying. Juma, please stop writing on my screen. Stop writing on my screen. Okay? So those on short position who are winning the trade will pay a fee to those on long position. Why? So that more traders will stop focusing their attention on the short position and then reverse back to long position. Now, this is what is going to happen. Let's assume, okay? Let's assume, let's assume now everyone is on long. Now everyone is on long. What is going to happen to the real price of the asset? If everyone is going on long, it simply means all traders will begin to inflate the price by going on long. Do you get it? So this is a smart move by traders or exchanges. So what they've done is that, okay, if that is the case, for us to create balance in the market, so that always there will be balance for the price not to inflate, for that not to be what imbalance in the market. When the market is moving on long position, now the long traders will pay funding fee to the short traders. Now, what is going to happen? If more people are going, if those on the long position are going to pay for the short traders, now some of them will begin to reverse their idea to trade on short instead of going on long, since they will not be willing to pay too much. So that is going to create what we call market balance. So when it comes to funding fee, let's go. How does it work? How does the funding fee work? Now, before then, let me know if you understand what I'm saying. Please do you understand. If you understand, give me one in the chat. If you understand funding fee, give me one in the chat before I proceed to how it's being paid. If you understand, give me one in the chat. If you understand that, give me one in the chat. So funding fee, the purpose of funding fee is to serve you the trader very well. The purpose of funding fee is to serve and protect the price of the asset. The purpose of the funding fee is to serve and protect the price of the asset, right? So this is how it's being paid. Every asset in the futures market, every asset in the futures market have time interval that the funding fee is being paid. Some have 8 hours, some have 4 hours, some have 3 hours, even some have 1 hour, depending on the asset. 1 hour, depending on the asset. So 1 hour here. Now, it is paid based on those winning the trade to promote what you call market balance. Okay. Now let's go into our exchange where we can see the funding fee. So over here, when you come here, let's go back again. Let's go back. So let's assume we are on home now. So on home, click on futures. On home, click on futures. So once you click on futures, let's go there. Once you click on futures, Come to the top here. Let me clean all these things here first. So on top here, huh? On top here, we are going to see what you call funding and countdown. Funding and countdown. Okay, funding and countdown. So this is the percentage that is 0.00005%. Okay, 0.005%, and then the countdown is what is 13 minutes. 13 minutes, 25 seconds, or 20 seconds. So as you can see the countdown here that it's running through, right? And once this countdown is over, those on this particular direction, which is the positive plus 0.005, will pay to those on the short position. So anytime you see a positive countdown, sorry, a positive percentage, it simply means it is those on long who will be paying. And anytime you see a negative countdown, or sorry, a negative funding fee, it simply means those on short that will be paying. If you understand that, give me one in the chat. If you understand that, give me one in the chat. If you understand that, give me one in the chat. If you understand that, give me one in the chat. If you understand that, give me one in the chat for me to know if you understand what I'm saying. If you understand that, give me one in the chat. Okay, someone saying not clear. Okay, please repeat. All right. So now, what we are saying is this. What we are saying is this. Okay, now listen. What we are saying is this. Funding fee, okay? Funding fee is created to bring what you call market balance, okay? Market balance. Because the actual price of an asset is on the spot market. The actual price of an asset is identified on the spot market. That is the real price. But on the futures market, because of the contracts, someone will just use a little money. Let's assume someone will go for a leverage of, let's say, 20x, and then a capital of 10,000, or let's say 1,000 or $5,000. Let's use $5,000. Now, if someone is using a leverage of 20x with a capital of $5,000, he is going to inflate or pump the price on the futures market. So if the person is on long, and let's assume more people are also using same leverage with 5,000 above, the price of the futures would increase. So for there to be contract, or for the spot price and then the futures price to be closer to each other, for there to be what we call market balance, there should be a need for the exchange to implement what you call funding fee. So the funding fee, when it's paid among traders, it will change the trend or the ideas or the mindset of the traders. Now, if I am to pay a funding fee, if all those on long are paying funding fee, most of them will reverse their trade to come on short so that they can also earn funding fee. And then moreover, if more people are paying and some are receiving, most of them will go to the receiving end than to go to the paying end of the market, right? Some of them would have to be recipients and others have to be payers. So it's called P2P, P2P. So funding fee is another form of P2P. And I'm going to teach you a lot of things about funding fee this morning. So what we are saying is that when it comes to funding fee, if you want to identify the funding, how it's paid, go into the exchange. Okay. When you get into the exchange, over here, click on futures. When you click on futures, you can see a countdown here. Look at it. We have funding and then countdown. Funding and then countdown. So when you look at the countdown, you can see funding. Now we have a positive funding fee and then also a negative funding fee. You get it? We have a positive funding fee and a negative funding fee. So when we talk of a positive funding fee, that is, it simply means those on long are the one paying. So long is positive, and then also short is what is negative. Long is positive, and then short is negative. So when it comes to the futures trading, this is how it's being paid. So every single asset you see in the futures market has got its own funding fee percent. So for instance, the one that you see here, is it positive or negative? Is it positive or negative? I've circled it for you. Is it positive or negative? 0.005. Is it positive funding fee or negative funding fee? Is it positive funding fee or negative funding fee? Is it positive funding fee or negative funding fee? Is it positive funding fee or negative funding fee? Very good. Very good. Now, the next thing is that you will see this countdown here, which simply means those on the long position after this 7 minutes, look at it very well. Look at the countdown here. It's 7 minutes, 34 seconds. Okay? 7 minutes, 34 seconds. It simply means after this 7 minutes, those on long position will be paying to those on short position. So that the price here can be what? Can be balanced. So that the price of the asset can be what? Can be balanced. Right? That is what it means. So when you want to know how can funding fee is how funding fee works, you click on it here. Click on it. Click on the funding fee. Let's click on it. When you click on it, you are going to see interval. You are going to see net funding fee, estimated funding fee. So on this particular trade, I am going to pay 0.0238. 0.0238. That is what I am going to do, going to pay. Right? So if you want to know more about the funding fee and then how it works, you just come here, click on the funding fee rate, then they will take you to history, funding history, funding history. Now, when you get to history, you look at it. So over here, you can look at it this way. This is it. Then this is the next funding fee. This is the rate 0.005, and then also this is the amount that is going to be paid. Okay, so that is sorry, this is the highest amount of funding fee, right? Now, when you come here, we are going to see how it has been paid, the timing. Look at the time difference, how it worked here. You are going to see it here. Huh? You are going to see it here very nicely. So you take time to read the market difference and how the funding fee has been paid over the past hours, over the past hours, over the past what, hours. Now, if you understand that, give me one in the chat. If you understand that, give me one in the chat. If you understand that, give me one in the chat. If you've understood, give me one in the chat. If you've understood, give me one in the chat. If you've understood that, give me one in the chat. If you've understood the funding fee, give me one in the chat. If you've understood, give me one in the chat. Very good. Very good. So now, if you are the type you don't want to be paying funding fee, listen. If you are the type you don't want to be paying funding fee, if you are the type you don't want to be paying what funding fee, listen. If you are the type you don't want to be paying funding fee, this is what you can do. This is what you can do. Oh, unless I stop sharing, then reshare again. If you are the type you don't want to be paying funding fee, always you need to check the assets. Okay, you need to check the assets you are going to pay, you are going to trade, and then also the countdown. Hmm? You have to check the assets you are going to trade. So let's go back. So let's go back. So let's assume you want to trade a particular asset, like let's say, let me use, okay, let me use this asset. Let me use this asset. So first, check the countdown. Check the count what? The countdown. Check the countdown, which is 3 minutes, 25. No, this is still for, I think this is still, it's still meant for the other asset, hamster. So you first need to check the countdown. If you enter this, even if the countdown is 1 second or 1 minute, if it is even 1 minute and you enter the trade, you will pay. If let's say it's supposed to be paid by long traders and you enter this trade within this 1 minute, you will pay. So mostly those smart traders, what they do is that if you want to earn funding fee, you target the asset, you check the trend, you check the trend of the market to see the trend of the market to see what is going to happen. Now, if you get to know the trend of the market and what is going to happen, you choose to join, but that one, in fact, if you don't have huge capital, that money is not going to benefit you. It's not going to be anything. You see, the money that is deducted from your account is not, or is deducted is not anything huge. But if you want to earn funding fee, it's also nice. You cannot always be paying. It is nice to also earn funding fee, right? So you can check the countdown to see. So with these 2 minutes, if you enter short position now, you will earn the funding fee. Once you enter short position within these 2 minutes, you're going to earn the funding fee as well. Please, do you understand? So there are so many ways you can use to check this. You can also use what you call coin glass. Okay, you can use coin glass to check how things happens in the market, how things happens in the market, your funding fee, and how most assets funding fee works. So if you want to know more about the funding fee, you can go to coin graph. Let's see. So on Chrome, or you can download the app. So you can download the app, or on Chrome, you go to, you use the Chrome. So let's see, coinglass.com. So let's go. Now, why are you going to use coin glass? And I'm going to teach you more about this particular coin glass to use in continuation of your features or your lessons. Okay. Now, coin glass is one of the cryptocurrencies app, or one of the apps that helps traders to um, identify what is happening in the market. It helps you to know market momentum, and then also those who are being liquidated, who is in the market, who is in control of the market, even the asset that is dominating. Now, presently, as you can see, when it comes to coin graph, you are seeing these two things here. Look at this. You are seeing this, and then also you are seeing altcoin season index. Altcoin season what? Index. Pay attention and listen to this. You are seeing this altcoin season what? Index. Now, with altcoin season index, we have 100%. We have 100% between BTC and then what? Altcoins. And then altcoins. Huh? Between BTC and then altcoins, it's 100%. Now, once BTC have a share of what, 50%, and then also the other assets have what we call 50%. So as you can see, now altcoin is neutral here because it has exceeded 50%, which is around 53%. That is what helps traders to identify or get to know that we are entering into what we call the alt season. Now, looking at the alt season graph, you can know that it's 53%. 53 what? 53%. So on coin graph, you'll be able to know. And once most of the altcoins, so this is when we can say that altcoins are beginning to outperform Bitcoin. Altcoins are beginning to outperform Bitcoin. So in this case, most of the altcoins are going to perform, and mostly once it gets to 60% to 75%, it simply means altcoin have outperformed Bitcoin. Over here, once altcoins get to 73 or 75%, we can say that the bull run is working. The bull run is working. So even if altcoins get to 75%, 80%, and it drops back, we can say that the bull run has happened. We can say that the bull run has happened. So when it comes to coin graph, you can see cryptocurrency data analysis. Cryptocurrency data was analysis. So when you come here, I don't know if I'm running. Are you following? Please, do you understand what I'm saying? Do you understand what I'm saying? Do you understand what I'm saying? If you understand, give me one in the chat. If you understand, give me one in the chat. If you understand, give me one in the chat. Okay, someone is saying lost, lost, lost. If you understand, give me one in the chat. If you understand, give me one in the chat. Yes. So someone say not following. Yes. So the bull run has not even started yet. Looking at the altcoin index, we can strongly say the bull run has not yet started. Do you get it? Looking at the alt index, we can strongly say the bull run has not yet started, and it is about to take over because now Bitcoin has done its best, and now the Bitcoin dominance is reducing and then losing its dominance towards to the altcoin. That is the reason why altcoin is having 53 index. It simply means comparing the price of the dominance of Bitcoin to altcoin, altcoin is now beginning to do outperform and then also dominate Bitcoin. You get it? That is the reason why over here we are seeing this value, that is the alt index at 53%. That is the reason why we are seeing the alt index percentage of value as well at 53%. And once it starts climbing from 53%, 60%, 75% simply means now the bull run is indeed, the alt season is indeed working. Do you get it? It simply means the alt season is indeed what? It's indeed working here, right? So that is the reason why you are seeing this. Let me go back. So I want to show you something. That's the reason I came to the coin graph. So unless I stop sharing and then share again. Um, I guess you are following. I guess you are following. I guess you are following. So when you come here, you can see this here, the alt season index. The alt season index, which is 53%, and it keeps pushing. So we said once it gets to 70 or 75%, it simply means altcoin season is in, right? And once after 75%, it can go up or it can decrease. When it decreases, we will say that now the bull run has taken effect. Now the bull run has taken effect. So now altcoins are outperforming Bitcoin for the past years. This is the first time you've seen altcoin outperforming Bitcoin. Looking at the past 2 years towards the bull run, this is the first time you've seen altcoin outperforming the percentage of what of Bitcoin. Right? Let's proceed. So now what we are saying is that when it comes to the funding fee, now over here when you come to coin graph, you will be able to know what happens in the crypto market on the derivatives market. So I've explained to you that when we talk of derivatives, we mean the futures market, comprise. It's also part of the derivatives or derivatives market. So when it comes to derivatives, you can see what is happening here. Now, those who are supposed to pay funding fee and whatever, you are going to see all of them here. So let's go back small. Let's go back. Let me go back. Good, good. Now, as you can see, most of the assets here. Let me see. Okay. So let's click on this particular asset, BTC. I guess we have to. So click on this three dots here. You can see market, um, exchange, funding rate. Very good. This is what I'm looking for. Funding rate. Okay. We are still talking about the funding rate. So you look at the funding rate here. So when you look at the funding rate, let's click on it. Funding rate. So funding rate heat map. Funding rate heat map. Okay. Funding rate heat map, and then also funding rate. So if you want to know more, you click on the funding rate heat map. Good. So every single asset you are trading in the futures market, as you can see them here, as you can see them here, this is the funding rate heat map and how it works. So you'll be able to know how the funding fee is being paid, those who are in control of the funding fee and those who are at the receiving end. And all these things will help you to make decisions in the market, either to go on short or to go on long, either those who are winning the trade and those who are at the receiving point of the market, right? So you can, I'll talk about the coin glass maybe more in our next session, either this evening or tomorrow, right? So let's go back. Now, the next thing that I have to talk about in the futures market is exactly, exactly. So the next thing that I have to talk about is cross margin and then also isolated margin. Cross margin and then also isolated margin. Cross margin and then isolated margin. So now, mostly a lot of people ask questions about the cross margin and isolated margin. People ask, what should I set up my trade to? Should I set it to cross or should I set it to isolated? And I'm always the type that whatever I'm teaching, I want to ensure that you'll be able to make decisions on your own, make personal decisions. And the only way you can make personal decisions is by understanding what you are doing. Is by understanding what you are doing, right? So now when we talk of cross margin, it's a very nice margin mode. Now, how does cross margin work? So the easiest way for me to explain cross margin is to set an example. Okay. So if you are using cross margin, let's assume you have double trades in the market. The work of cross margin is to use or utilize your capital in the market to sustain your trades in the futures market. So let's assume you have $100 you are using to trade on three different assets. Let's assume Solana, BTC, and then also Ethereum. Okay. Now you've exposed $30 each, $30 each to these three different assets. Now let's assume you are on long on all these three assets. Yet BTC is dropping. Simply means it's on short, which simply means over here the trade can likely go against you. So whenever you are using isolate cross margin, because this BTC is going to go against you, it simply means you've lost funds here. So with cross margin, it will utilize the trade you have, the $30 you have here, the $30 you have here, to help sustain this particular trade in the BTC account, right? When this happens,
your trade will be able to sustain in the market. Now, at the point in time when it has lost all its potential or momentum in the market and it can no longer withstand in the market, this is what is going to happen. You are going to be liquidated. You are going to be liquidated. So, if you have extra money, it will continue to use the extra money in your exchange, that is in your futures account, to continue the trade for you. In your futures account to continue the trade for you. So at the point where you don't have any money in your futures account and the remaining money is just this $30, it will consume together with this so that it can sustain BTC in the market. If BTC still loses its strength and the market is still going against you and it has to liquidate, it's going to liquidate all the trades in the market. That is Solana, BTC, and then also Ethereum. It's going to liquidate all the trades in the market at the same time. So looking at cross margin is nice. And when it comes to trade sustainability, then cross margin is the best. It will help you. But then when it comes to what we call liquidation, huh? Liquidation, cross margin would never favor you in terms of liquidation. Whenever you are getting liquidated, cross margin will automatically liquidate all the trades, including your funds in the futures account. Including your funds in the futures account. So you need to be careful whenever you are using cross margin. It's good, and I really love cross margin. The next thing is what is isolated margin. Isolated margin. Now, when we talk of isolated margin focus just like the name itself bear witness. Isolated margin uses what you call focus on or helps in terms of what interference. Isolated margin that does interfere with your trade. So, for instance, the same account, $100, Solana, Ethereum, BTC. Now, $30 each, $30 each, $30 each. If BTC is still losing its dominance or is still losing its momentum in the market, it will continue to lose its momentum without interfering and sustaining the trade using this remaining amount of money that you still have volume in the Solana and then Ethereum. So BTC would only go out of the market if it happens that it's going to be liquidated. Only BTC will go out of the market, whilst Ethereum and then Solana will still be in the market. But so you make your profit. So you make your profit. So when it comes to cross margin and isolated margin, they are all good because some will think of how to sustain their trade. Some will think of how to prevent liquidation. Do you get it? So in all, if all I've been saying is that if you are using setting up one trade, it's good you can choose to use cross margin. You can choose to use cross margin. But if you have multiple trades, then you can think of using isolated margin so that it can protect your different trades at different times. If it happens, liquidation should happen. Do you get it? If it happens, liquidation should happen. Notwithstanding, if you want to use cross isolated margin, then that is fine. This simply means anytime you want to set up a trade, so if you want to set up a trade, this is what you are going to do. If you want to set up a trade, first you have to consider either your trade is on cross or it's on what? It's on isolated. So you will decide, are you going to set up the trade on cross margin or on isolated margin? Are you going to set up the trade on cross margin or on what? On isolated margin. So let's go to Royalq. So on Royalq now, we set up a trade. After setting up the trade, you go into your exchange to check either the trade is on cross margin or isolated margin. If it's on isolated margin and you want to change it to cross margin, then this is how we are going to do. So let's go into so this Royalq. This is Royalq. I guess you are following. I guess you are following. Please, are you following? Please, can you see my screen? Someone say I can't see your screen. Can you see my screen now? Can you see my screen now?
Oh, someone saying your screen is not visible. Is my screen visible?
Yes.
Is my screen visible? All right. Now let's go to Royalq. So this is Royalq. You want to set up a trade, right? So you click on futures. So on futures, let's assume you click on this particular asset. Now you consider either you're going to go on long or you're going to go on short. Now you click on create. You click on I understand. So over here, you come. Am I going to go on long? Am I going to go on long or I'm going to go on short? If I want to go on short, I click on short here. Hmm? Oh, right. I click on what? I click on short. So once I click on short here, this is my trade. So let me use this. Okay. Right? Or I choose to click on long. Then after that, I click on trade settings. If I click on trade settings, now I have my assets. I have my assets here. So I have to go into my exchange. So let's go. I have to go into my exchange. Now, getting back into my exchange, what asset was I setting up in Royalq? So I will search for the name of the asset. Now, let me see if I do remember that name. AAV. So this is it. Is this the asset? Good. So now I come here and then I click on cross. If I want to change it to isolated, I click on. So we have cross and then also isolated. Cross and then isolated. So I click on isolated if I want to change it to isolated. If it is on cross, I click on cross. So since it's already on cross here, if I want to change it to isolated, I click on cross, then I click on isolated. Once I click on isolated, once I click on what? Isolated, this is it. So I'll just have to do what? Come here. I'll just have to go back. Now everything is on. Everything is already on isolated. Everything is already on isolated. So this is isolated. Now let me come here on Royalq. So let me come here. Now I can proceed to set up my trade. So whenever you want to set up a trade, once you get the name of the asset, go into your exchange first. Go into your exchange first and change the name of the asset. Check the name of the asset. So if it is AGT, let's say AGT, then you click on it. Once you click on AGT, just come here, come to your Binance, then click on it, AGT. So AGT. Now here is it. You click on it nicely. After clicking on it, you check is this on cross or isolated? So I want to change it to isolated, then you click on isolated. If it's on isolated and you want to change it to cross, you click on cross. Do you understand? If you understand that, give me one in the chat. If you understand that, give me one in the chat. If you understand that, give me one in the chat. If you understand that, give me one in the chat. If you understand that, give me one in the chat. Now, listen. This is not going to take you even 30 seconds to do this, or even a minute to do this. Setting up a trade is very simple. Setting up a trade is very, very simple. And setting up a trade shouldn't take you even 2 minutes to set up a trade. It shouldn't take you 2 minutes or even 5 minutes to set up a trade. Now, you know the name of the asset. You've seen the signal. I know I'm going to trade on Solana. Okay, I come here. Solana. Where is it? So, where is Solana itself? So, this is Solana. So, I click on Solana. It's already on isolated. Sometimes some of the any asset that you've ever traded on is already having it. Okay, any asset. If you traded on the asset and you set it up to cross, once you come automatically to be on cross. If it's on so isolated, it automatically be on what isolated. So it's an isolated. I just go back. I come here.
where's Royalq? So let me go back. On Royalq, I go back to set up my trade. So futures, Solana, SOL. Then I click on it. After clicking on it, I click on create. After clicking on create, I click on trade settings. After clicking on trade settings, I come here. Now, the other part of it that I will talk about briefly before I give you the permission to ask your questions is this. Okay, is this particular place. This particular place. Now, this is where a lot of people also face challenges. This is where a lot of people face challenges. So mostly a lot of people ask, how do I enter my trade? Now, I've been saying that the profit you are going to make depends on how you enter or you calculate this particular prices here. If you have $10 you are going to use to trade, if you have $20 you are going to use to trade, if you have $30 you are going to use to trade. Consider your leverage, your leverage. Now, after considering your leverage, if I have $10, it's going to be 10 times 10. That is going to give me 100. So if I come here, whatever that I'm going to enter here, it should be equate to what? 200. If I enter 10 times 20, this is 200. Whatever that I'm going to enter here should give me 200. So over here below, if I know I'm going to enter 200, it simply means it should reflect here that this rate is going to be 200. In your exchange, it's 20 USDT. Over here, it's going to be 200, right? It's good. So you have to check that. Now, the easiest way to do that, let's see. The easiest way to do that, let's look at any asset that I've never traded. Let me see. Um, let me see if I'll get one. Let me use this asset here. So you click on create, you click on understand. You click on trade settings, you click on manually fill. Over here, they said the minimum amount is what? The minimum amount is 5 USDT, which simply means 74 COTI is equal to 5.02 USDT. So if I know I want to enter 200 here, if I know I want to enter 200 here, listen, if I want to get 200, which is 20 times my leverage, which is 10, 20 times my leverage, which is 10, is going to give me 200. So it simply means 200 must reflect here. I will just have to come here, take my calculator, 74, listen, 74, 74 divided by 5.02 is going to give me, how much? 14 point what? It's going to give me 14.741. Let's assume so. 14.741. Okay. Now, so I'll just have to come here. Since I want to enter 200 here, it's going to be 14.741 times 200. That is what is going to give me the amount of quote that I'm going to pay. That is going to give me the amount of quote that I'm going to do what? I'm going to pay. So I'm going to enter here. So I'll just have to go back. 14. So 14.741 times 200. That is going to give me 2,948. So let me come here. 2,948. Give me 200. You see, it's going to give me how much? 200. 2,948 is going to give me 200. Is this difficult? If you understand, give me one in the chat. If you understand, give me one in the chat. If you understand, give me one in the chat. If you understand, give me one in the chat. If you understand, give me one in the chat. If you understand, give me one in the chat. If you understand, give me one in the chat. Now, this evening, I'll get back to explain more about trade settle. This evening, I'll get back to explain more about what? About trade settle. This evening, I'll get back to explain more about trade settle. So get prepared for that. I'll get back to explain more about trade settle. So get prepared for that. So It's very simple here. Once they give you the asset, just come here, check the name of the asset. So you check the name of the asset, CVC, you click on it, you click on create. Based on the position or the direction, you click on trade settle. As I click on manually create. To click on manually create, you are seeing that now you have this total assets here. That is 44 CVC. VC, okay, is equal to 5.01. 5.01. So if I want to know the price of one USDT in CVC, I just have to come here, take my calculator. 44 44 divided by 5.01. That is going to give me 8.627. That is going to give me 8.627. Now I know my leverage is 10x. My leverage is 10x. And my actual capital is $20, which simply means 20 times 10 times what? Times 10 is going to give me 200. So in my Royalq, my first buy amount is going to be 200. It's going to be 200. 200 here. I want to enter 200 here. Instead of 5, I'm going to enter 200. So if I want to know this, it's going to be the calculation that I did here. So 8.267 8.267 times 200. That is going to give me 1,653. 1,653. So let's enter it. 1,653. That is going to give me how much? Let me see if we did the right calculation. 1,653. 1,000 that how come? So let's see. 44 divided by 5. Okay. 44 divided by 5 is going to give us 8.8. So 8.8 times times how much? 200. 1,760. 1,760. 760. That is going to give us 200. That is going to give us how much? 200. So 1,760 is going to give us 200. So that is it. Please, do you understand? Please, do you understand? Very good. Please, do you understand? Very good. If you understand, give me one in the chat. If you understand, give me one in the chat. If you understand, give me one in the chat. If you understand, give me one in the chat. Okay. So now, it's very simple. So when it comes to trading Royalq, okay, when it comes to trading Royalq, it's very simple. Just get your Royalq, set up your trade. You go to Royalq here. You set up the trade. So you see, we have over here, we have spots. We have spots, and then also we have futures. So just come here and click on futures. After clicking on futures, search for the name of the asset you want to trade. Search for the name of the asset you want to trade and do that. Now, another interesting thing is that you can also open margin calls. You can open margin calls. And then also you can also hedge your trade. You can hedge your trade. Now, when we talk of hedging, that is also another interesting thing about trading, especially using Royalq. It makes it so easy for you. When we talk of hedging, okay, let's assume I'm on Solana, I'm on long, and the market is dropping. So there is a change of character or opportunity in the market. I can choose to hedge my trade by opening short on Solana. By opening what? Short. So this is long. Then I can choose to open short on Solana. The same thing, if I'm on short and the market change character, I can also open long on what? on Solana. That is the meaning of hedging. So you can hedge your trade, and whenever you hedge your trade, it helps you to make profit. And sometimes one interesting thing about hedging is that the opposite trade may be in the market for long, and the actual trade may be in the market for long, and the opposite trade may be generating profit for you. And sometimes you generate profit until you realize that even you generated profit which is equal to or which is even more higher than your actual money in the market. Your actual money in the market. Please do you understand? Do you understand? Now let me give you the opportunity to ask your questions. So this evening, please, any question about trade settings, I'll get back to you this evening. I'll get back to this evening session to handle that. Any question about trade settings? So yes, it will be shared. It will be shared. It seems okay. It's being recorded, so it will be shared. Now, what we are saying is that when it comes to hedging, listen, when it comes to hedging, okay, so when it comes to hedging, we have long position and then also short position. Long position and then also short position. So one may decide to go on long. Now your trade is already on long, and now the market has changed character, and the price is dropping. Okay, since the price is dropping, there is an opportunity in you shorting the trade, because there is a change of character here. Now, you short this trade, you make your profit. So the asset keeps dropping. You can still short this trade, you make your profit. Whilst waiting for this trade to be sold out of the market, you can continuously or consistently make profit on a short position. Also, there is another change of character where now the actual price is reversing into your setup position. So in Royalq, there's a trade here. Let me see. I've hedged it, and after gaining the profit, the actual trade is already gone. So, for instance, you have hamster here. For instance, you have hamster here. Now, how many of you recall this hamster? Last week, during last Friday meeting, I used that one as an example here, and I was on long position. I was on long, and the long position kept long, so I hedged the trade. After hedging the trade on short, I make all the necessary profit that I have to make before the long position gets sold. Then the short position too is remaining in the market now. Okay. So this time around the market is on an uptrend, and I can there is not yet an opportunity here. But if there is an opportunity, I can still long this trade. If I long it, I'll make profit whilst waiting for the short. Mind you, it was already on long. It was already on what? On long, and I hedged it to short. Now after making the short position sold about 5 times, okay, before the market reversed back. The short position sold about 5 times, and I left the last one. This is the fifth trade on the trade on the hamster. Now after that, the long position reversed and it sold out of the market, and now it is remain with the short position. So if I want to hedge this trade, I will just come here. I'll click on this. Let me go back. I understand. Let me go back. This I'll click on this. This is where you click. They said create long strategy. So this is already on short. You can see it's already on short. So they said create long strategy. So I'll just have to come here and then click on the plus sign. After clicking on it, you can realize that automatically it is on long. Sorry, automatically it is on long because the asset is already on short. So automatically it falls on long. So I just have to click on trade settings. After clicking on trade age, after clicking on trade settings, I'm going to die here soon. After clicking on trade settings, Everything's already here. This is the setup for the short position. So it has already reflected here. So if I want to activate, everything is set, and I'll just have to click on save. After clicking on save, I click on confirm. Now after clicking on confirm, I click on what? Activate. I click on activate. Once I click on activate, the trade will begin to map up or warm up or heat up in the market. Do you understand? Do you understand? Do you understand? Do you understand? All right. All right. Someone saying no. Yes, the settings remain the same, but you have to go into Exchange to check if you want to increase your capital because sometimes you see that, let's assume you are using $100 on the long position and you want to hedge it. It will still give you $100, but sometimes you can see that there is opportunity, more opportunity in the short position, and you want to increase it to $150 or $200 or $1,000. You can choose to do the setup again to increase it. No, you can't increase the leverage. You can't increase the leverage. It is going to use the exact thing for you. So the only thing you can do is the fund. You can do something about the fund, then you proceed to go. All right. So can you decide to increase? Okay. So um, so the settings remain the same. Yes. So someone is asking, what is its disadvantage? What is its disadvantage? Now, the main purpose of you hedging a trade is to make profits on the opposite side before the market reverses back to hit your actual trade. So your main idea is that, okay, you promise you are going on your right hand side, and there has been opportunity on your left hand side. So you are going to go for the opportunity on your left hand side and then return back for the opportunity on your right hand side. That is what it means to hedge. That is what it means to hedge. I don't understand your question. Does it take percentage to hedge a trade? That is what it means to do what? To hedge. Yes, you can always change it. You can always change it. You can always change it. So if you want to change, so if you want to change that, you can always do it. Change it. So if you hedge on equal amounts, how can you profit from the trade? Yes, you can profit. If I have $100 here and I also have $100 here, if I'm expecting to make $20 on this particular trade, and I also have the same take profit, I'll make $20 here. On the short trade, I'll make $20. Since I'm expecting to make $20 on long, and I still have the same setup on the short, I'll make $20 on the short, right? So you are going to make the same profit there so far as you have equal setup. All right. Then if you hedge, okay. So let me see. There are other questions. Let me take your questions and then bring this session to an end. Can you decide to increase the leverage? So let me see. What When it comes to hedging, does the coin need another margin or does it use the same margin? It needs another capital, another margin to trade. It's not going to use the same capital you used. So the answer is it in futures, and can I trade take more than a day in futures like in sport? Yes, of course you can, depending on the trend of the market. Of course you can, depending on the trend of the market. Depending on the trend of the market. Please, me, whenever I set up a coin, I'm liquidated though. the market is going the right direction. Ha ha ha. So the thing is, if the market is going on the right direction, you won't be liquidated. If the market is going on the right direction, you won't be liquidated. Okay. So it simply means the market goes against you. That is when you will be liquidated. If you get liquidated, it simply means the market goes against you. All right. Let me see if there is any hand up. Okay, two hands up. Two hands up. So crypto Alex, you've been asked to unmute, ask your question. You've been asked to unmute, ask your question.
Okay, thank you, my leader. My question is, sometime after enter a trade, you can see the robot when the robot is still when the market is still dropping, the robot is buying. But sometimes you can see instead to push the liquidation price far away with my average price, you see the liquidation price is coming near my average price. I don't know why.
Mm. All right. Now,
Yes.
one thing about the liquidation price and then this average price thing is that mostly some people set up or you set your actual or your first buy amount is very huge and your margin cost is very low. This one
Mm-hmm.
differentiate the futures market from the spot market. So
Mm-hmm.
if your first buy amount is so huge and then your margin cost is very low, it doesn't have serious impact. That is the reason the last time, if you could follow, Leader Julius taught you that it's better for you to reduce your first buy amount and then be increasing your margin cost instead. When you do that, anytime you increase, if your margin cost is higher or is very strong, it always pushes it away. But when it is low and the market momentum too is very high, it still have less impact. Do you get it?
Mm-hmm.
So it's always good that whenever you are setting up a trade, yes, of course, we all know that you want to make good profit, you want to make huge profit. But if you really want to capitalize on your income to make good profit, once open margin call, it's good that you do what you reduce your first buy amount and then also increase your margin cost instead. All right. So let me take the next
So
person.
that means it's better, for example, for someone who has like 200 as capital. You enter with 20%, that means 40. So if you
Yes.
enter with 40 and you change, you go after enter a trade, you go to change to 5.
So in that case, you realize that the difference is very slight. But there are some
Mm-hmm.
cases where your actual capital is $500, and then you are buying margin cost of $10 and $5, $10. You get it? So always
Mm-hmm.
those things also matters a lot. Those things matters a lot in your trading, especially when you want to create a difference between your first buy amount, your average price, and then also the liquidation price. It's important. So maybe this evening I'll get back to talk about the trade settle. So you meet there. Have a good day. Okay, so let me take the next person.
Okay, thank you.
All right, you're welcome. So Nasiruddin, you've been asked to unmute, ask your question.
Good morning, my leader.
Good morning.
Thank you for such a wonderful presentation. But my question is bordered on the issue of hedging. At what point do you have to hedge? That's the first question. And then is it possible to, maybe you long a trade and then you short at the same time in terms
All
of
right.
hedging? Okay. And the third question is, at what point do you have to close one trade and focus on the other? Otherwise, one will be more prone to liquidation? Or what do you think?
All right. So at what point do you have to hedge? And um, now when we say opening long and short position at the same time is what we call hedging. So your second question, I have to clarify that one first. Opening both long and short position at the same time is what we call hedging.
Mhm.
Huh?
Yeah.
So if you have long, you have short on the same asset, we call it hedging. Now, when do I enter into that particular trade? So it depends on you. One, if you analyze the signal or the trade and you realize that now there has been a change of what? A change of character, right? Or the trend of the market has changed. It has changed and you realize that okay, now it is on an uptrend. Instead of going on downtrend, it is on an uptrend. You can decide to do a hedge the trade so that you can make profits opportunity in the uptrend. Now, at what point in time do you close the trade? At a point in time, you realize that okay, you set up the trade. Now, for instance, when I set up this particular trade last week, Friday, this trade has been here since Friday. Now, when I set up this particular trade, it was on long position. Okay, I'm using this to explain to you your question. Now, it was on long position. I short it, I hedged it to short. Okay, after hedging this particular trade, my take profit was 1.5% on each trade. On this 1.5%, I realized that I'll be making at least close to $10 or $9 on each trade that is sold. So anytime I make like $5, I'm satisfied with the profit. I'll close it. Between $5 to $6, I'll close the trade. So when it comes to when do you close the trade, you can choose to wait for your take profit to be triggered. Since you know that the asset is still going in the same direction. So if you are on an uptrend or on long position, and then the market is on short position or it is dropping, your trade is on long, and the market is dropping, you can choose to check out on your indicators to know either the market is still having the momentum to go uptrend or downtrend. Since it is having the momentum, you can choose to leave the trade to for your take profit to be triggered by itself. Or when you're satisfied with the profit, you can choose to close it. Now, the next thing is that mostly anytime you set up a trade, you are going to see the P and L here. So what most of the time, what I've thought is that, and it's really working for other people too. You set up the trade, you realize that okay, there is an opportunity for the market to go uptrend. Though I'm on a short position now, my P and L has rise to let's say 5%, and so the market is having opportunity to go on an uptrend. It simply means the market is going against me 5% here. So I can choose to join the market on this angle. And after joining, I'll make profits once it keeps climbing, while the market goes against me on the short position of 10%. If it goes against me 10%, it simply means I've made 5% here. Do you understand? The market is on short position.
Explain.
On short position, I'm having a negative 5%. Now, if I enter long here, if it goes on negative 15, it simply means I've made positive 10 on the long position. Do you get it?
Okay.
Very good. So in that case, I've entered early and I'll be able to make profit on the long position. So far as this particular trade continues to go against me or to go on downtrend. So I guess that will help. So let's meet this evening if God permit, and maybe you
Okay, so
learn more from that.
I'm my leader.
All right, I'm listening.
Please, so with regards to the equal amount mentioned, assuming like you said, like you initiated a trade with $100 on a long position, and depending on the market trend, you decided to go on short on the same amount. So let's say the market moves up, you get 1.5%. It drops, and then you are making 1.5 at the other end. Meanwhile, you are losing 1.5 on the uptrend. So where then comes the profit?
Actually, the thing is, you are waiting for this trade to be executed, right?
Okay.
You are waiting for this trade to be executed. So you made a profit here, not because you are waiting for this trade to be liquidated. Listen, you are not waiting for this trade to be liquidated. You are waiting for it to be executed. You get it? In this
Okay.
case, since you are waiting for this particular trade to be executed, now, if you made, let's say, $5 here on the long position, that wasn't the actual plan. Your actual plan is to make the profit on the short position. And now it's on long and you've hedged the trade. If you make $5 here, it goes into your account until this particular trade gets closed. So you are not waiting for the trade to be
Okay.
liquidated, but instead you are waiting for it to be executed. You get it? And so
Okay.
far as this particular trade
Okay.
is going to be in profit, you've already made extra profit on the long position. So if we're expecting to make $1 profit here on the long position, you've already made that $1 profit there. So if you make this $1, now totally you made what $2 and no longer was $1 on this particular trade.
Okay.
You get it?
Okay. Yeah,
So
well understood.
actually hedging the trade willingly makes sense and it's very profitable too because you size opportunity using both your left hand and then your right hand. That is both short and then long at the same time.
All right.
And I can be honest that this particular trade, this profit, this $40 thing that you see here has already been made as profit on the long position. This negative thing that negative 40 that you see here has already been made as profit on the long position.
Okay.
Do you get
Well
it?
understood, Alida. Yeah.
Very good. All right. So I guess your
Thank,
question
thank,
has been
thank you
answered.
so much. I was grateful.
All right, you're welcome. Okay, so let me check the next person. So in Papa chat,
Hello. Yeah, good. My question is the liquidation price. I realized some time ago that the more margins are open, the more I get closer to liquidation. Why? I get closer to liquidation price, get closer to the average price. Why is it so? Thank you.
come again with your question.
The more margins you open, the more you
Yeah.
get closer to liquidation price, get closer to the average price, rather than I thought it should be opening, rather giving you more space. But when you open more margins, your liquidation price get closer to be liquidated in a simple way. I don't know how I should put it, but
All right. So
in
I
my,
think
in
it's
my
other way
experience,
around.
that's what I realized, that the more I open margins, the more I get closer to liquidation in terms of price.
Just it's other way around. But then what I was explaining initially was that mostly your trade is overweight with imbalance. You already have let's say 2,000 position amount, 200 here, and you are having a lesser margin cost of let's say $5, or $10, which makes everything to be imbalanced. So that was the reason I was saying that in the evening, if God permits, when we meet in the evening, I'll talk more about the trade settles. So that all those imbalances that creates your liquidation price to be different from how it's supposed to be, you'll be able to understand, right? So one thing that you also need to understand is that when it comes to liquidation price, it's not always the case that because you created the margin call, it is being affected by the price movement. Sometimes when the price is moving very fast against you, your margin calls will help. But yet, because the price is moving very fast, it also gets closer to your liquidation price all the time. So this evening we'll talk about that.
Thank you. All right. Thank you so much.
All right, you're welcome. Okay, so I think now we have one hand. So Crypto Alex, I don't know either your hand is up again or so Grace, you've been asked to unmute, ask your question.
Okay, hello all. My question revolves around hedging. So once the signals have been sent, and the signal clearly says that you're longing that trade. So to be safe, is it okay when you go to put in the trade settings, you do the long as per the signal and hedge as well, and select the short as well? Or
No,
what particular time are you select the hedge?
no. So if you do listen to me well, I said when you if you want to hedge the trade, you are not hedging the trade because you have to hedge it. You are hedging the trade because now there has been a change in the market direction. If it's on long, it has changed from long to short, and you are seeing the change very clear that the market is changing direction or it has changed direction. That is the reason why you want to do a long the trade or short it with the opposite direction of based on your trend or your actual asset.
Thanks for the
You
clarification.
get it? All right, you're welcome.
Yes, thank you.
Okay, so let me take the questions in there. So you mean opening more margin calls close the gap between the average price and the liquidation price? So who is this? So if the market trend is going down, you make profit on hedge trades while the market is retracing. Yeah, so hedging has really given the extra profit ever since my upline session. Yeah, that is good. So let me see, please. I need clarity on long shot. The path covered on white is it the one trading or please? I'm confused. I guess your confusion has been settled. Let me see. Okay. So is this trade on short or long, please? I need more clarification. Oh my goodness. Okay, so I have a big problem with my account. I can't trade. I can't trading it always showing me errors. It can't work on trading boss. I know the English is not English at all. So I have a big problem with my account. I can't trading it. Always showing me errors. I don't get your question, but if I can get some little meaning sense from it, it seems it always shows you errors, right? Is that what you are saying? It always shows you errors. If it shows you errors, then you have to check your API binding and then reset it again. Okay, so when the market is against you and you hedge the market, I guess it has been answered, right? One side is favoring you. What happens to the other side? So I guess I've answered that question. So how can I increase my margin calls? So that one has to do with trade settings. That one has to do with trade settings. So please, whenever I set up a coin, I'm liquidated though. I think I've answered that too. So guys, does margin calls work on both long and short? Yes, it does. Does margin calls work on both long and short? Yes, it does. So after after enter a trade, then you realize that the market is going against you. Is it better to stop or to pause the strategy to avoid liquidation price? Now, you can't pause a trade in futures. Listen, you can't pause a trade in futures. In futures, we don't pause a trade. If you pause a trade, it will close in your exchange. If you pause a trade, it will close in your exchange. That is one thing that you need to know. All right, so I'm taking um one last crypto alert. I don't know either your hand is still up or what. So, Kate, you've been asked your mute. Ask your question.
Good morning, my leader. Please,
Good
my
morning.
question borders on stopping a trade. I have a trade that is running on features, long position. So he has been waiting for MACD for a very long time. I'm tired of waiting for that MACD. So I wanted to stop it. I wanted to stop it so that I can trace straight without any indicator. How do I do that? I saw stop anyway. I clicked on stop and I'm still seeing the coin. So I don't know why it is still like that.
All right. So she's really, really tired of MACD.
Yes, I'm tired.
So she's tired of MACD. Now, when you use any indicator like RSI, MACD, KDJ, one thing is it's set up the trade on preset market, preset. So it's either it has not been bought. That is the reason why it's still hanging. Once the trade is bought, it will continue to work in the market and you will see it ongoing. But if it is hanging, you can choose to leave it so that you proceed on using your capital to set up other trades. Yes.
But
Okay,
it's still
so
showing that
the
it's
next thing.
running. That is the issue. It's still showing that it's running. So I don't want it to conflict with whatever I will do.
Listen, if the trade has been bought, then it simply means it's ongoing and you have to leave it. You need to exercise patience and then wait for the trade to be sold. If it has been bought. But
It
if it
has
is
not.
hanging, if it is weak, it has not been bought. If it has not been bought, go and trade another coin and leave it. Use your money to trade other coin.
Okay. So I'll go to
Yes.
Binance and change to the coin I want to trade.
Yes. No,
Okay.
I'm not, go and set up different coins to trade. Since the trade, if you set up using any of the indicators, it's based on condition. You set up a condition to the trade that if you reach this particular point, get triggered and buy the asset for me. Now the time is not due for it to do what? For it to be triggered. So it's going to hang until the time is due for the trade to be triggered to buy. Do you get it? So until
Yeah.
that trade is triggered to buy, it's not going to buy. What we are saying is that since you have the money there, go and use the money, set up another trade in your Royalq and trade. As simple
But
as
what I'm
ABC.
saying, before I will set up a futures trade, I have to put in the coin in the futures in my exchange. So if I change the one that is already there hanging, is it not going to conflict?
No.
Okay. Thank you so much. That's what I want to know.
All right. Okay. All right. So guys, I'm about to end the lesson, but I can see so many hands here. Let me see. So I'm going to take just two people, John and then also Emmanuel. John and then Emmanuel. So um John and then Emmanuel. Okay, so John, ask your question. You can ask your mute, so ask your question.
Thank you, my leader. Good morning, my leader. Good morning, my leader. Can you hear me, sir?
Yeah, good morning, we can hear you.
Good morning, everyone. Thank you for the amazing teaching. I appreciate it, sir. Sir, I want to quickly ask a question. We talked about edge just now. Switching from short or to long. Okay, when he now say create long, that I've created the long, then maybe I have like $200 there. But that coin that I was trading before is not on isolated, it's on cross. What if my $200 now liquidate? Is it not going to carry everything, including the very coin that I was trading on short before? I don't know if you understand my question, sir.
Yes. So when a trade is on cross and gets liquidated, it liquidates with everything. I've explained that already.
Okay.
All
But
right.
what if
So
the short one has not entered liquidation, but is still waiting? You understand, sir? Like that particular coin that I used to give an example. We have been trading that coin for like 3 weeks now.
on cross,
Yes,
listen,
sir.
my brother, listen. On cross, when a trade is liquidated, it liquidates all the positions. So if it's still in the market, it's because the other positions have momentum to the trade, to give it energy to trade. Once all the trade loses its energy, they will all get liquidated.
So if it happen that, okay, now this is my last question. If it happen that I'm seeing that the coin is about to liquidate the previous one, because the previous one that is on short, the money that I had there, like $600, that one is holding. And then this one that I'm just trading on this long now, I always have $200. And if I see that the market is going opposite that very one, should I cut it? Should I stop it?
Yes, that is if you want to reduce your losses, you can choose to close that particular trade.
And because if I don't close this long one, it may affect that short one, which is carrying $600. I will lose everything. Is that not, sir?
Yeah, so you always need to check out your trade and then know the best way to go about it. So if you think the other part of the trade is going to be too risky for you to handle it, then you choose to close it. If not, so you can also consider the margin ratio check the margin ratio of the two trades, check the liquidation price, and then also if there is money that you want to sell, open more margin call on it. You open margin calls and you pay in fees.
Okay, sir. But selling that
All right.
particular coin is not going to affect the short, right? If I sell it manually, is it going to affect the short?
No.
Okay, thank you, sir. Done, sir. Thank you.
All right, you're welcome. Okay, so Emmanuel, you read the last after that I'll listen to them.
Okay. Thank you, Coach Emmanuel, for this very elaborate training. I need some clarification on the hedge mode. Now, I know opening both long and short is the hedging. My question is this: if I am trading, if I'm longing a trade, and I have a budget of $200, I'm longing a coin. Now, the market is against me with about I put in for $40 altogether with the margin calls that I've entered. It has amounted to $120. Now, but the market is against me to a region of even losing about $10 of that very particular trade. If I now switch on short, because the market, the trend is going against me and is going short. Now, if I switch on to short, the balance I have, which is about $80, is it the same $80 that I will now make a new trade setting for that same asset that I'm trading?
Yes.
Okay.
So since you have
And the
surplus money there, it's going to use that money that you have to trade on that short position.
okay. Okay.
Yeah.
Okay. Not that it's going to take out of, okay, it has already taken out, well, let's say 120. Now, so the balance of the 80 is what the new hedge mode that I'm putting, which is the short. I was longing initially, but now I'm going short. Is the balance of that 80 that is going to be used, isn't it?
Yes, that is it.
Okay. Okay. Thank you very much.
You're welcome. All right. So I think, guys, it's 9 o'clock. So, Crypto Alex, I guess you've asked your question. Let me see. Um, so, with regards to you saying not to pause and future trading, can't I pause and set a low price or increase margin for saying no? We don't pause a trade in the futures market. If you pause a trade, you close it in the exchange. Take note of that. All right. So, guys, kindly clarify how to choose a coin to go on short on. More that one, if you want to know how to choose a coin, please kindly join the technical analysis lab. It will help you to know more about that. So guys, let's end here. If God permit this evening, we will still meet again. Let's end here. If God permit this evening, we will still meet again. So today is Wednesday and we are still going to trade more. So get prepared, fund your accounts, get more settlements trade, and also use your results to invite your prospect to join you. All right, let's all enjoy trading with Royalq. It's so an amazing journey, whilst we also embrace and prepare for the altcoin season. Let's keep making money on the futures market. There are a lot of things we are going to learn, and in fact, we have so many stories, so many lessons that is going to ensure we progress in the business. So get prepared, and we will continue to learn them one after the other. I wish you all the best in your trading journey and have a good day. So the channels will be sent on the platform. So please, on the WhatsApp group, we will drop it there. So let's end here. It's better, man. We'll meet again this evening. I wish you all the best in your trading day. All right. Love you all. Bye bye.